Hi, I'm Laura Flanders. Direct democracy is still alive in the state of Vermont. On the first Tuesday of every March, communities across that state hold town meetings at which they elect local officials, approve the coming year's budget, and vote on proposed resolutions and legislation. This March, public banking was on the table, and 18 out of 22 communities voted in favor of turning their state development agency into a public bank. Why? Well, perhaps they're looking at North Dakota, the one state in the union that has a state-owned bank, and the state that fared the best during the so-called Great Recession. What else is in it for Vermonters? Well, enough, apparently, to spark some fierce opposition from the private banking lobby. With us to discuss what happens next and why Vermonters want a public bank is Gwen Hallsmith, Executive Director of the Public Banking Institute. Hi, Gwen.
Hi, Laura. Great to be here. Thanks so much.
Gwen, tell me a little bit about that meeting. Kind of exciting stuff for those of us who unfortunately don't have the town meeting system. What was it like on March 4th?
Well, it was great to hear all the returns coming in from around the state, because towns all over the state voted for it. It wasn't just a little cluster here or there. But town meetings are, like you said, direct democracy at work. And I thought it was a really effective way to get the public banking message across, because after all, the banking lobby couldn't make it to all the town meetings. And even if they did, the rules of town meeting are such that you would have to be voted to accept their testimony. They can't just come and testify like they do at the legislature.
Now, how did you get involved in all of this?
How did I get involved? Well, I wrote a book a few years back with a man named Bernard Lietaer. He used to work as a central banker in the European Union and helped invent the euro, actually. He's an expert on central banking and on the problems with our monetary system. After writing the book, I set up a group in Vermont called the Vermont Monetary Policy Advisory Group, which was rather laughable because everybody thought that monetary policy is only considered at the national level.
That's
but
right.
We were looking at all the different ways that Vermont could take action to start to address the effects of the monetary system, which is, of course, also what the Occupy movement was protesting. The consolidating effect of the monetary system, where it systematically extracts wealth from both people and the earth and transfers it to the very few.
How would a public bank for the state function differently?
Well, a public bank would put the returns that are made on banking loans into the general fund. So right now, the state puts all of the tax deposits and the transfers from the federal government into a private bank, TD Bank. TD Bank then takes that money and makes its own investments to provide the state with the interest that it has on its deposits. Right now, TD Bank is one of the big funders, for example, of the XL Keystone Pipeline, which a lot of people in Vermont are also opposed to having happen. The returns on that investment go to the bank, with some going to the state in terms of the interest on our deposits. But in this case, the money would go into a state bank. The state would invest the money in local energy projects, like the 80% renewable energy goal that the state has set by 2030. And the returns on those loans would come to the taxpayers. So that would help ameliorate the effects of this large transfer of wealth to the very few by transferring some of the returns on banking to the taxpayers and citizens of Vermont.
So you're kind of doing away with the profit-motivated middleman, or middlewoman, I guess. Who has state banks outside of this country? Because we talk about North
there's
Dakota.
Radical fringe economies like Germany and Taiwan and India and Brazil also have this type of banking.
Some of the most successful, talking about Germany, some of the most successful economies
in the Western world. It's not exactly a untested idea. It's a very well-tested idea. In fact, Britain, the United States, and Canada tend to be in the minority of countries. The vast majority of countries do have this form of public banking. Costa Rica is another one. Puerto Rico isn't a state, but it does have a public bank.
So why don't we have more of them?
Well, because there's a lot of money to be made in banking, and the banking lobby is opposed to public banks. I think the public deposits, which of course are the biggest deposits that there are, you and I, we start worrying, I suppose, if this ever happened, if we have more than $250,000 in a bank, because
I'd actually feel kind of good if I have more than $250,000 in a bank.
Well, but that's the limit of the FDIC insurance. So if you have more than that in a bank, you're not insured. And if the bank goes under, you might lose the money that you have that's more than $250,000. Well, the average daily balance for the state of Vermont, which is really a very small state, is $350 million. So it's not covered by the FDIC.
As right now.
Right. no state or municipal deposits are, because they're just too big.
So why don't we have more public banks in the United States? Is it because they're too risky, too dangerous? Are we afraid?
Well, in fact, in Vermont, we're already doing the riskiest part of banking, which is the lending part. We have 4 state agencies that do the public lending: Vermont Economic Development Authority, Vermont Housing Finance Agency, Vermont Student Assistance Corporation, and the Vermont Municipal Bond Bank. They all have reserves to cover any losses, so they're doing the risky part right now. In fact, VEDA, which is the Economic Development Authority, they give loans to people who the banks consider too risky to lend to. So they're the lender of last resort in many cases. The other risks that they might be thinking about, for example, are the liquidity risk, right? That's something that bankers manage all the time when they take short-term deposits and have to make long-term loans.
Having to deal with cash flow.
Cash flow, right. Well, that's why we need the banking license, because the banking license and the window at the Federal Reserve and interbank lending, that's how bankers cope with liquidity issues, and that's what we're trying to mobilize for the state, is that same coping mechanism and for liquidity. There's also, interest rate risks, where you're lending over the long term at one rate, and then suddenly the interest rate does crazy things, and you're suddenly holding these securities that aren't worth very much.
What would the bill do? The bill that was voted on, or the resolution that was voted on in the town meetings?
What it would do is it would transfer 10% at first of the state treasurer's deposits into a state bank. We had proposed in this legislative session that bank be VEDA, the Vermont Economic Development Authority, that they be given a banking license and that they start to accept these deposits. That would basically short-circuit the process that occurs now, where the state puts its money on deposit with TD Bank and gets a very small interest rate return on that deposit. But meanwhile, when VEDA wants to do their economic development lending, they have to borrow that money from Wall Street and pay interest on it. Now, if we just used our own money for our economic development lending and the returns went into the state treasurer's office and the state general fund, that would be a better system all around.
So I'm assuming it's going to whiz through the state Senate and Assembly. Enough said.
Wouldn't that be nice? We've done a study on what would happen if we actually implemented the state bank, and the study showed that over 2,500 jobs would be created, adding over $340 million to the state product every year. If you use things like gross national product to track the success of a particular program, you'd say, oh, that's a good one.
A job creator.
A job creator, and something that's going to add productivity in the state. But all of those common sense arguments don't seem to faze the people that are listening more closely to the banks than they are to the people.
And those banks are getting pretty busy lobbying.
They are, yes.
What are you up against?
Well, we're up against Bank of America, Wells Fargo, the banks that are too big to fail. They pay lobbyists to spend a lot of time in Montpelier. They've drafted memos that even the state administration officials have used themselves for their own arguments when it comes to why are we objecting to a bank. My sense is that the elected leadership in Vermont is actually afraid of the banks. They don't want to run into the buzzsaw of banker opposition. Next election campaign, we have fairly frequent elections in Vermont every 2 years.
So where does this stand? The resolution was just a resolution. It's not law. It has to go through the Assembly and the Senate, as you've just said. Where do you stand right now?
Well, I think this year we'll be able to claim some level of victory, because it starts to look like the 10% that we talked about transferring from the treasurer's accounts into direct economic development lending in Vermont will go through. They've moved that into a new bill called Senate 220, which I believe passed the Senate. The banking license, however, which of course is part of the toolkit that we need to make all of this work, is not going to pass this year. But we'll keep working on it next year, because I think as the state gets more and more used to this idea of being a bank, they'll start to see the logic, and they'll start to see the benefits of it. We never proposed to do the whole thing all at once.
Do you see North Dakota as a model for Vermont, and why?
North Dakota could absolutely be a model for Vermont, because one of their major lending programs, of course, has been energy lending. And they've reaped the profits from that energy lending at the state. That they had a debate a few years ago about whether to get rid of the property tax because the Bank of North Dakota has transferred $300 million over the last 10 years into the state accounts through its lending program.
They invested in energy, they struck oil and gas, the money is coming back to the people.
Right, exactly.
Not
so
unlike what
Vermont could
happens
do
in
the
Alaska.
same thing. Vermont could do the same thing, only we would do it with renewable energy, with our solar investments, with our wind investments, with our water investments.
Is there a national movement around this?
Oh, absolutely. Public Banking Institute now has coordinators and people interested in public banking in 40 states.
What do you see on the horizon?
Well,
You seem quite hopeful.
I am hopeful because it makes sense. And it's a tested method for economic stability and economic resilience. Right now we're working with the city of Detroit and some of the cities in Michigan who are under emergency management to try and see how various forms of public banking could really help them get through their economic crisis. If you look at what's happened in Detroit, there are some enormous problems there that have been caused by the private banks. The banks getting the city interested in betting on interest rate swaps is what led to Detroit's declaration of bankruptcy. And it remains to be seen whether that will actually stand up in court. It hasn't yet. So I think looking at how we can better manage our public finance is a really challenging issue for our country right now, especially when we need jobs and we need economic development and we need new innovation and energy innovation. And this is a perfect way to do it.
You mentioned the toolbox of things at the disposal of legislators and states as they try to build what we at Yes Magazine have started calling commonomics, locally focused, people-centered economies. What are some of those other tools that you've written about on the finance side?
Right, on the finance side,
with this?
and this is something I'm looking at as the new executive director of the Public Banking Institute, is expanding our scope a bit to look broadly at finance. Because if you look at the new investment possibilities that are made available through the Jobs Act and the SEC regulations that went into effect a few months ago that help mobilize money to smaller firms and smaller investors that can use it to make that local investment. Michael Schuman and I are working on a project for that. If you look at time banking as a way of making exchanges with each other that helps ameliorate the problems of a privatized monetary system, that's another really powerful thing that public banks could help a lot. I'm meeting with Edgar Kahn and Chris Gray, who are of Time Banks USA in Washington.
Former Grit TV
tomorrow.
guests.
Yes, they're great. So looking broadly at how to democratize banking, how to democratize finance, how to democratize those very essential structures for our economic health is really, I think, where we're going.
You know, you're obviously addressing an immediate need. You're also grappling with a much bigger phenomenon, which is the way that we think about our economy and our financial system. We've been trained in this country to think about the economy as a private matter. And you're really, through all of this, it seems to me, not to mention through your public democracy system in Vermont, saying, no, this is a public affair.
It absolutely is. People don't realize how much the public sector contributes to the economy. And one of the ways that public banking can help that happen, of course, is through the investment in public infrastructure. If that's all we do in Vermont is move these dollars into public infrastructure lending, we've accomplished a lot. We have a lot of roads and bridges that need repair in Vermont, and the money flows out of state to Wall Street to fund the bonds to finance that infrastructure. Private companies wouldn't get very far without roads, bridges, wastewater treatment systems, communication systems. All of those things are public infrastructure and are the commons. I think money should be looked at as the commons as well, because it's the economic structure that mediates all of our exchanges, finances all of our big projects, and yet it's been privatized, at least in this country, so that the private sector are the ones that benefit from what essentially is a public function. And that is keeping the economy on track.
Capitalization, we found out during the financial crisis that half the banks didn't have much actually held in reserve. But is that an issue?
Well, because in Vermont we're already doing the lending, what we discovered in our study is that the existing state lending agencies already have plenty of unrestricted assets that could be used to capitalize a state bank. They have more than what would be required for a state bank. There's no additional bonding or capitalization needed.
And finally, I've heard the old chestnut around the Constitution, that somewhere in the Constitution there's a ban on letters of credit being issued by the state.
Well, that's an interesting question. The letters of credit argument is one that's often used about the state issuing their own currency. But the state of North Dakota has been running a state bank constitutionally since 1919. The bankers did actually take them to the Supreme Court, and they lost. The state bank in North Dakota is considered a perfectly legal institution. So I don't think that's a risk. But that question goes back to a really interesting historical fact, which is that the original Constitution was actually drafted around the same kind of struggle between the bondholders and the taxpayers. The bondholders who had invested in the Revolutionary War wanted to get the speculative returns on bonds that they had invested in. There was a lot of trading back then that would never be allowed today. And the taxpayers were getting tired of raising taxes to keep up with their speculation. And so they kept trying to do other things. And that was what led to that prohibition of state letters of credit in the Constitution. But I think just like any constitutional argument that's long since outstayed its welcome, we could also look at that one while we're looking at the same question of corporations as people and other things too.
Thank you so much, Gwen. You've given us so much to think about. If people want to get involved in this or find out more, what do they do?
Then go to the Public Banking Institute website, make donations. We actually need donations to keep our institute going, and look at the different things that are going on. We have a conference coming up in Detroit. We have initiatives all over the country. There's coordinators, like I said, in 40 states, so there's plenty of ways to get involved.